Let me ask you something, and I want you to answer honestly. Not to me, to yourself. If someone stopped you right now and asked, "How much do you actually have saved for retirement?" What would you say? Because for a lot of people watching this, the answer probably sounds like not enough. Maybe it's a few hundred, maybe thousands, or 100,000. Maybe it's nothing. Maybe you've got a retirement account somewhere, but you haven't opened it in years because you already know you're not going to like what you see. You're 40 or getting close, and somewhere along the way, life just happened. Student loans stacked up, jobs didn't pay what you expected, a medical bill showed up at the worst time, rent kept climbing. Maybe you had kids. Maybe you were just trying to keep your head above water. And now you're here, watching this, because something in the back of your mind knows it can't keep going like this. So before anything else, you need to hear this. But you do need a real plan. Not motivation, not vague advice, something clear. Because the first step is facing where you actually are. Most people avoid this part, but you can't fix what you won't look at. My name is Nathan, and I spend way too much time thinking about how money actually works. Do me a quick favor and subscribe to the channel, because you may never find it again. There's a guideline that gets thrown around by major investment firms. By the time you hit 40, you're supposed to have about 3 times your yearly income saved. So if you make $60,000, that means around $180,000 saved. If you make $80,000, you're aiming for something like $240,000. And if you're nowhere near that, you're not alone, not even close. Data from the Federal Reserve shows that people between 35 and 44 have a median retirement savings of about $45,000. That's not a small gap. Most people in that age range are sitting at a fraction of where the targets say they should be. And when you look at why, the pattern is pretty clear. Nobody handed you a playbook. Wages didn't keep up with costs. And if you're being honest, you probably didn't grow up watching someone build wealth step by step. So no, you didn't mess this up because you're bad with money. You were dropped into a system without instructions. But now you can see the gap, and that changes things, because awareness is where everything starts. Now here's the part most people don't think about. Time has a cost, even when you can't see it. Let's say you start investing $300 a month at 40. If that grows at a steady rate, by 65, you might end up with around $227,000. Same exact habit. But if you had started 10 years earlier, at 30, that number jumps to something close to $540,000. Same effort, same contribution. The only difference is when you started. That's it. And that gap is real. You can't go back and start earlier, but you can make sure that 10 years from now doesn't look exactly like today. Because the person who starts now and stays consistent will always beat the person who keeps waiting. And if part of you still thinks 40 is too late, remember this. Almost all of Warren Buffett's wealth came after he turned 50. The timeline isn't what stops people. It's the delay. So now we meet a starting point. Not a guess, not a feeling, a number. Grab a piece of paper or open your notes. Write down everything you own. Savings, retirement accounts, investments, your car, any equity if you own a home. Now write down everything you owe. Credit cards, student loans, car loans, medical debt, anything with a balance. Subtract what you owe from what you own. That's your net worth. And if that number is negative, that doesn't mean you're stuck. A lot of people in their 30s and 40s are right there. What matters is that now you know, because that number is your past, not your future. Now we build forward. Step 1. If you have high interest debt, that's your priority. Credit cards charging 20% or more are not small problems. They're financial emergencies. No investment is consistently beating that. So list your debts from highest interest to lowest. Attack the top one first. Pay minimums on the rest. Every dollar you knock out there is like earning that same percentage back. Guaranteed. Step 2. Use every retirement account available to you. especially if your job offers a match. That's not a bonus. That's part of your pay. If you're not taking it, you're leaving money on the table. And if you're older, there are catch-up contributions that let you put in even more. Use them. Step 3. This is the part people don't want to hear. You can only cut your expenses so much. At some point, the bigger lever is income. At 40, you've got experience, skills, connections, things you didn't have at 25. Use them. Negotiate. Switch roles. Pick up something on the side. There's a limit to how much you can shrink your life. There's no real ceiling on how much you can grow your income over time. Step 4. Start investing. Even if it feels small, 50 a month, 100 a month, it's not about the amount at first. It's about building the habit. Because once that habit is in place, it scales. And time matters more than timing. Waiting for the perfect moment is how people stay stuck. Step 5. Protect what you're building. Because one bad event can erase years of progress. That means having a basic emergency fund. 3 to 6 months of essential expenses. It means simple insurance if people depend on you. And basic planning so your finances don't fall apart under pressure. These aren't luxuries. Most people don't fail financially because they don't understand money. They fail because it's uncomfortable to look at the gap. It's easier to ignore it, to assume you'll figure it out later. But later always turns into now. And there's a version of you at 65 who's going to live with the results of what you do today. That version of you will either have options or they won't. They'll either have space to breathe or they'll be relying on things they can't control. And that outcome isn't random. It's built, day by day, one decision at a time. You're not behind because you're incapable. You're behind because nobody showed you the system early enough. And life got complicated. That's it. But now you see it. Now you have a path. So here's what happens next. This week, you calculate your net worth. No guessing. You face the number. You make a plan to eliminate your highest interest debt. You contribute enough to get your employer match. You start investing something. And you begin building a safety cushion. Because the next surprise is coming. It always does. The difference is whether it knocks you down or you absorb it and keep moving. 40 with no savings isn't the end. It's a starting line. And a lot of people who look secure today started right there. The ones who catch up aren't the lucky ones. They're the ones who stopped avoiding the numbers and started moving anyway. If this video helped you, share it with a friend. Please show support for the channel and hit the subscribe button.